Nigeria's insurance regulator continues to encourage insurance companies in the country to merge in order to breed stronger firms that can underwrite bigger risks and do business professionally. Now, Custodian and Allied Insurance earlier this year merged with another industry player in line with the wishes of the regulator. Now, joining me to look at insurance space in Nigeria to join me, of course, is Emily Atebe. She's the Chief Financial Officer of Custodian and Allied Insurance. Sorry about that. That just went off my head for a bit. But let's look at your 2012 numbers. Very impressive. Looking at PAT up 94% at over 2 billion from just a little over 1 billion in 2011. I'm also looking at your gross premium. That climbed 18% to 11.8 billion now. Now, what was the key driving force behind these strong numbers?
Okay, thank you very much, Esther. For the gross premium, we actually recorded an increased level and volume of activities in 2012. For that led to the 18% growth you saw. We also were able to increase our retention level from 47% in 2011 to about 56% in 2012. Of course, that would positively impact the bottom line. Our investment income also increased by 15% year on year, 2011-2012. Then, of course, the operating expenses, despite the environment we operate in.
Yeah, I mean, yes, that's exactly why I asked that question. Because the numbers are almost unbelievable looking at, because obviously we know what's going on in the industry. We know that insurance penetration is low. We know how, I don't know if it's a culture thing, Nigerians are still yet to really embrace insurance, particularly some of the products within the insurance space. And yet we have these strong numbers.
Okay. So on the operational expense savings, Custodian has been known to be a very efficient company in terms of operational efficiency. Over the years, everyone knows that in terms of maybe profit or even revenue per head, we actually have the highest in the sector. But we leverage a lot on technology. It's been a very lean structure in terms of human capital, but a lot of leverage on technology, and then of course ensuring operational efficiency without necessarily compromising the quality of our service delivery.
Okay. Well, let's move on from the numbers. Okay. Well, before we go on, your outlook for 2013.
Okay. 2013, it's a different playing field for us. We were just a non-life business in 2012 with an investment in a group that had a life business, a non-life insurance business, and also a pension fund administrator and a trustees firm. But in 2013, as you had mentioned earlier, we had merged, so it's one group. So we have the two general businesses, or the two non-life businesses now operating as one. And then the life business also in Custodian, first for us, and then the pension fund administrator. So I would say that it's a bigger group.
But this is new for you, the life, the pensions that you're going into. What are your key strategies in terms of making inroads into these two key areas?
Okay, that's why we did not go for a new license. We got an existing business. Okay. And we've been in those businesses for, say, over a year, because this whole process started way back in 2010. And we had people in there. We've been trying to manage those businesses and also to ensure that we brought in the Custodian culture of efficiency while just before the merger was approved. So we have companies that are already operating, and they've become profitable even before the merger this year. And we're just going to continue with the Custodian strategy, the Custodian structure.
And you think that will work?
We believe it's going to work. Even with
the life and the pensions sector, or at least areas that you're going into?
Yes, these two sectors have actually benefited from the pensions reforms in 2004 pensions reforms, and also all the things that have been going on in the sector. So we believe that there's the market out there, and we also know that we believe we have the right strategy, we have the right people.
Okay. Sorry, but let me come in here. Yes, you have the right people, they have the right strategy, but we're dealing with a population that has a somewhat different view about life insurance, as it were. Of course, the religious aspect always comes in. We look at one or two surveys conducted on the population where people would rather, just pray for protection, than actually go out and buy life insurance. So I imagine that must be difficult, but you seem very confident that your strategies will work.
Yes.
But it hasn't been tried and tested yet, so are you keeping your fingers crossed that it will work?
But there have been profitable life businesses in Nigeria. It's just that it could be much better. And then if you notice, there's been an influx of foreign companies trying to come in. Most of them are going into life. So people are seeing they're saying something here. We have the population, and then the regulator is actually doing a lot to try to improve the whole space. That's the sector.
You think that would get people to embrace it?
There has
because
to be awareness.
It's about the customer, it's about your clients. Yes, you on your part as a player, or the regulator on its part as an industry regulator, yes, it can make the environment more profitable for you or better, whichever way you might look at it. But at the end of the day, it all comes down to the client. You being able to make your product, as it were, appealing to them.
That's where the strategy comes in. We're looking at partnering with some strategic partners, looking at how you can reach people, or what are people investing in, what are those things that they're interested in, how can we partner with them and combine insurance with the products that they're interested in. Of course, there's going to have to be a lot of how would I put it, trying to create awareness.
If that has been ongoing, you think perhaps we should see more of that?
We are going to do more of that. We're going to do more of that. We're not going to work alone. We'll partner with others. And I believe the regulator is also doing something, because the Nigerian insurance sector has, it's not really performed as well as it should be, considering the position of Nigeria in in Africa. So all of those things are there. But we believe that if you offer the right product, you package the right products. Our products in custodian are tailor-made for our customers. We want to know what they want, not just force things down their throats. So it's not a case of we want to sell life business the way it's been sold in the past. What are the things that could interest them? How can we present them with hybrid products that will be attractive to the customers?
Do you think this is a strategy that, or do you see this strategy, maybe obviously not exactly like yours, do you see similar strategies being employed by other players, by the competition? I'm asking this because we know that there's a general struggle within the industry. Some are still battling with the capital base. Obviously some are not creative enough in the way they package and deliver their products to the general public. Do you think that perhaps more should look towards mergers and acquisitions?
I believe that whether voluntarily or not, that's going to happen in terms of more mergers and acquisitions, because you talked about capital. It's very important. And having the right capital base is also what will drive the growth, future growth in the sector, but that's not even for life. That's even more for non-life, because volumes, big ticket transactions, policies have to be written by those who have the right or the size to be able to handle that, so that we're not just pipelines for taking businesses out of the country because you're having to reinsure to be safe if you don't have the capital base to retain all of those risks within your system. So yes, there'll probably be more mergers, and I believe that the regulator is favorably disposed to that. Do
you think that now, with a renewed focus from the regulator to help better the industry, do you think that the problems that the industry has witnessed over the years or even decades look more surmountable right now than perhaps 10, 20 years ago?
Well, it's like you mentioned, it's been a long, the problems have been there for a while, but I believe a lot has been done recently. If I can just talk about the no premium, no cover thing, it's not a new policy, but the regulator has been very strong in enforcing this year, and we're already beginning to see.
I'm sorry, we're going to have to leave it there. But thank you so much. You provided a very good insight into the industry, where we are so far right now in terms of mergers and acquisitions, and of course going forward what the regulator is doing. Thank you so much for being here. Emily Atebe, Chief Financial Officer at Custodian and Allied Insurance, looking at Nigeria's insurance space.